Alright, ICT traders, good to have you here. So in this video, I'm going to solve one of your problems because I have realized that a lot of you people know what price needs to do before you get into the trade, but then timing is becoming a serious problem for a lot of you people. Alright, now I'm going to show you what you should do with your point of interest. I call it POI. Point of interest in simple terms is basically where we are expecting price to trade into before we take any form of action. All right. For example, what I have here on my chart is a literal example of a buy trade I want to take with my point of interest that I will be marking and then showing you how price is going to react in that particular area. Let's assume I'm looking at this chart and this is the 1 hour time frame. What I have right here from the most recent chart is that price has been coming after doing my normal market structure. You see price has been coming. This is a shifting market structure here. All right. I don't want you to complicate anything about trade. Make sure everything you're doing is so simplified that even a child can understand. So this is it. Price has shifted structure, leaving you with this thing. Now look closely. Every time price does these things, there is an information you will need to also harness. All right. Look at this. We have this price action. Boom. Here, pushing up to this area, creating this, going up. Now, what do you have in this kind of price action? I just want you to take some seconds, no rush, and answer, what is this? Those of you who have been following me for a while, you will know that this is a mitigation block. All right, a bullish mitigation block. Why? Because a mitigation block is now our point of interest. We expect price to come to that mitigation block, but then how are we going to react when price comes to our mitigation block is the biggest question, and that will solve your problem of timing and knowing what to do at the right time. I hope this is understandable. All right, I am not just giving you theories, guys. I have done this time and again and again. In fact, even yesterday we had a trade from this. Okay, look at this. I will show you that separately. We have price coming, shifting structure. We are expecting it to come. I will show you right there on the chart. But then it is something I do time and again. This is with the community, guys. I'm not the only one. I'm not showing you something that I've done and then it later happened. No. I was expecting price to come to a particular level and I did the same thing time and again and again. So this is what I have. If I look at price, I have premium and discount. Now the first checklist I must look for is my point of interest in premium or in discount. Now if I am going bullish, I will want to see my point of interest in discount. All right, which is what? This guy, the last buy candle around that area. So this guy is my point of interest. That is basically where I am expecting price to go to. Good. And what time frame am I watching it from? I'm watching it from the 1 hour time frame. Now the multiple time frame analysis comes in handy. 1 hour time frame is my intraday time frame. Okay, 1 hour. Okay, let's give it 1 HTF. All right, that is 1 hour time frame. Now I want to see retracement coming into this area, and I want to see a confirmation that this point of interest is strong enough to hold on to my price. All right, this is what you should do. You want to vet it. When I say vet, like VET, you want to make sure that price is capable, or you want to test whether price is capable of holding, of reversing from this point of interest, because at times you will not see price reversing and then you get disappointed. But there is a way to know whether price is going to hold on to it or not. I hope this is understandable anyway. There is a way to know it, and that is simply by you going. You see, this 1 hour time frame is what we are seeing. 1 HTF. Now, if we are watching our retracement in either 15 minutes time frame or the 5-minute time frame, depending on which one is giving you the details you're looking for. Because I normally advise to go into a time frame lower, or maybe 2 time frame lower from the time frame you're watching your major price movement. And if this is your major price movement, don't worry, price is always behaving in fractal. It is not going to disappoint you. I hope this is understandable. Anyway, so my point of interest is in discount. I will now decide to go to the lower time frame. Let me go to the 5-minute. I will expect price to come into my point of interest. Let me refine it here. All right, refining it would say this is my POI. Guys, I want to take this trade. This is a bullish mitigation block. Bullish mitigation block. It's a final confirmation I'm showing you before you get into trade. You do this, you will not have trouble taking trades, guys. You do this, you will not have trouble. So let's go. 5 minutes. You see? Notice what price will do at the point of interest. Okay. Is that telling you something now? Notice how price reacted from your point of interest. Yes, I have hit something that is relevant to the smart money. Now, I will want to say, okay, I am bullish on the 1 hour. And my retracement came in after I had this shifting structure. I have break of structure downward. Is that looking like a downtrend formation in an uptrend? So I have a shifting market structure. And this is a break of structure. A downtrend formation in an uptrend. My big boy time frame is up, but this guy is down. So for me to confirm that this guy is going to hold price, I want to see price shift structure to the upside. To create a movement for an uptrend, that means I must have an alignment between the higher time frame direction and the retracement direction. So this is where it comes in handy. Just notice what price is doing. You see, all through this, notice what happened here. Notice how the body of the candle is closed at this level. It pushed below, but then the body of the candle is rightly placed in that area. Guys, this is so powerful. So what do you have now? Is this not the shifting market structure you're looking for? A lot of you people will not be patient. Will not be patient for all these things to happen. But if you can be patient and wait for this confirmation, guys, you will do so much in the market that you will be amazed at the kind of profit. You see, making profit in this market is not equivalent to how many trades you are taking. It is a function of the quality of trades you're taking, or how good the trades you are taking are. If you're not taking good trades, you will definitely not make money. Good trades are your gateway to making money. So now, look at this. I have institutional reference point as my POI. I now have shifting structure. I now have another entry point here. This is the confirmation. Guys, this is powerful. This is powerful. If you can learn this alone, you'll be very much okay. So look at this. We have this. So if I tell you that this is a breaker block formation inside of your mitigation block area or point of interest, you will not lie to me. So is price running away from me? No. I have confirmation that price is now bullish on the lower time frame, just like the higher time frame is bullish. So all I need is to pick my flip level, look for that point of interest, and I now have it with a confluence self. Look at this. We have confluence here. We have a fair value gap, and we have a bullish breaker block. So if I am taking this trade from that area and then my target is here, my stop loss is here, am I wrong? No. One thing this gives to you is that instead of me to take the trade from 1 hour, all right, from 1 hour, just look at it carefully. From 1 hour and my stop loss is here. What this gives to you is that it reduces your stop loss and gives you almost the same risk to reward. Final confirmation. This thing I'm teaching you, I've paid a lot of money to learn, but then I'm giving it to you freely because I know someday, sometime, some of you will come back and tell me thank you. All right. some of you will come back and tell me, thank you for giving us free content that is worth millions. So if I bring this guy to this area as my stop loss, I am not wrong. What is my target? My target is like 34 pips or thereabout, and my stop loss is just 12 pips. That's almost 1:3. So if price is coming now, notice what price is doing. Notice what price is doing. Am I chasing trades? No, I am not chasing any trade. Notice what price did. Those of you who are impatient, and then you cannot wait for price to come to your point of interest. Now, somebody reached out to me yesterday that he always wait for price to come to his point of interest and it doesn't come. I told him the first thing is that it is not a must that price must come to your point of interest. Have your set of rules. If price did not come to your point of interest, it simply means there is no trade for you. Walk away, have a peace of mind. All right. So what happened here is the exact confirmation you need every time you are taking trade. It's not only this one, guys. It's not only this one. Let me go ahead and show you more of these trades that I took, and they were the same thing in a simple setup. All right, in a simple setup. Okay, let's talk about yesterday's trade now. All right, let's talk about it. I told them before then, I said, what was it? Let's go to my Telegram. This was it. I saw it coming in the morning and I told them this is what I'm expecting price to do. I said, I'm strongly expecting this mitigation block to reject price. Before I finally gave them the signal, I said, I'm expecting price to trade into this fair value gap and bullish breaker. Not, I have a bigger stop loss, so please use a proper risk management. So look at this. This was the bullish breaker I was expecting price to trade into. All right, I was expecting price to trade into. So I saw price came in. We had a shifting structure right here. There was a shifting structure to the upside, and the downward movement started coming in. Boom! I went to the 5-minute time frame now. Because the downward movement started coming in. Let me just adjust this. It started coming in. So what am I having here? Remember I told you that I started seeing a shifting structure here. Let's assume it started from there, and then price is now downward, while my big boy time frame is telling me I want to go bullish. So notice what price did. Price kept coming down. At this point, price did not touch my even though price is in discount area. Comparing this, if I go back to the setup, if I have my FIP level from here to here, guys, all right, to that guy, if I have my FIP level from there to there, what I have is that price has been coming to the discount area. Price is now in the discount area, but it has not touched my point of interest. So does that mean if I have a shift in market structure here, and don't forget, guys, I think I had a shift in market structure where that was not a shift in structure. Let me play it out. I saw it happening yesterday, but then I refused to be confused. All right, this is it, guys. This was it. This was a shift in market structure as far as you have the body of the candle closing above. So if I were not informed, I would just say, okay, let me enter the trade here. All right. And my stop loss is going to be here, below here. And I will target maybe the opposing liquidity, which is this upside. But look at what price did. Price came and traded into my point of interest. And this is the information I want you to take. If price had touched my point of interest, this shifting structure will have held price not going lower. But then this shifting structure, even though it is a shifting structure, but because I did not touch my point of interest, it fell. But this time around that price has touched my point of interest, let's see the shifting structure that will come in. All right, a shifting structure is now coming in. That was when I shared the signal with them. This one. All right. I shared the signal with them. I said, okay, This is what I've seen price do. And I looked closely. I don't have any fair value gap here because this one, there is no fair value gap. It has been mitigated. This one, everything. The only fair value gap I have was this guy. This fair value gap here. And then this one above. So if I am seeing from the left hand side also, I have this guy. So this confluence. I said, okay, I want to take the trade here. The stop loss is very big. But then it is not the only thing. I cannot risk anything. It's either for me to do risk management and then know what percentage I will be risking from my calculation or reduce my lot size so that I can be in this trade. Then you would have challenge. It doesn't matter how big your stop loss is. If you are putting it at the right place, what you need is proper risk management. That is why I told them that I have a big stop loss. So please use proper risk management. So look at this. If you are going to be in this trade, you see, price was going there. Boom, I'm in the trade. Price went ahead and dealt, with our emotions, All right. It finally played out as we expected it. Now, notice what price do. It took time, but then did it play out or not? That is the question. It played out. And did it ever come back to this area? No. So this is very important for you guys. Please take note, every time you are doing this is the type of confirmation. There are so many other ones I don't want to take so long explaining this, but I want you to go through your chart and check for this kind of confirmation. You will be amazed to see what will be happening. All right. So guys, thank you very much for watching. If you have any question, I will be so glad to answer you. I'm so happy to be making this video for you guys. See you guys in another video. Thank you.